Welcome to the Value Builder Podcast, where we focus on real estate with a value-add mindset. Real strategies, real operators, real outcomes. Let's dive in.
All right. Welcome, Danny, to Value Builder Podcast. Super glad to have you here. It's been a while since we talked, and it was hard to pin you down. I'm really excited to have you here. So, Danny, I would like to start pretty much diving right away in nitty-gritty in commercial real estate. I know you hit transition quite a lot from the previous model you have. Can you give us an idea? What are you chasing nowadays? You know, commercial real estate has changed a little bit. What are you chasing right nowadays? What asset class? What model? Can we start from there?
Absolutely. Well, to start off, I just want to say thanks, Saul, for having me on. I definitely appreciate it. You're like a brother to me. We've shared so many amazing experiences together through life, and it's just been a pleasure to go down that road with you, man. So happy to be here. And yeah, a little bit about my company and what we're doing is we're a boutique commercial real estate firm based out of Utah, but we had an office in Colorado and one in Scottsdale, and now we're fully remote, trying to live a little bit more of that freedom lifestyle here. But essentially, at the beginning, I started off with small multifamily, right? And I think that's where a lot of us start is single family residential. And then we transition into multifamily. And then if you ever get out of that and kind of transition from there, I think we have this running joke that it's called the evolution of a real estate investor, right? And once you
Yeah.
find out about a triple net lease, the light bulb kind of goes off. And so back in 2014, I think I bought my first true commercial asset. It was a half vacant medical building in Colorado Springs. And shortly thereafter, I bought a small bay industrial facility, and then I bought 2 shopping centers and, really fell in love with retail and industrial. That has been the bread and butter over the last decade for sure. And hands down, it's what I love to do the most. So I dabble in all kinds of different stuff. We're doing ground up construction on manufacturing buildings right now in Houston. We've got some land deals that we're working on. We've got a storage facility. I've bought plenty of office and medical, plenty of apartments, and then some readaptive use and build to suit ground lease structures that we've done. And I would tell you right now that I am primarily focused on neighborhood shopping centers and small bay industrial in the value add sector. So primarily looking for something that we can really squeeze some juice out of, right? And create
Yeah.
equity out of our creative structures, right? And really turning these projects around. So that's where I am focused. That's what I love to do, and that's what we're doing.
Awesome. Yeah, that's very similar to what we're chasing right now. It's small bay industrial and retail. It definitely got a little bit more competitive in the last couple of years, like many folks are getting into there. Curious, what about office? No, I know you were buying office buildings. So where are you at with the thinking that we're past and we definitely an upswing on office? We definitely see a lot of reports improving, but yourself, are you chasing office actively right now?
We were trying to primarily in Houston. We have a lot of boots on the ground out in that neck of the woods. And so we were chasing some mid-rise, some high-rise stuff down there. I feel like you have to be extremely careful and picky on what it is you're buying because a lot of this office may not come back or it may not come back for a long time.
Yeah.
And so, we're not institutional level where we can hold on to things and have deep pockets to weather, a decade-long storm or however long it takes, right? So something that we kind of transitioned when we were looking at those mid-size or the high-rise and mid-rise buildings was we were trying to get double-digit cap rates going in with a lot of upside, right? So it's like, look, we knew we could get really strong cash flow because we knew we were going to be low leverage and, focused on quality buildings that we could really divvy up into small bay suites because we felt like that was where the opportunity was. There was a lot of buildings with big footprints that were vacant available, right? And a lot of these tenants were downsizing. And if you couldn't accommodate that, you were losing tenants. So we just bought a building actually less than a year ago in Houston. It's a flex building. So it's got office and warehouse component, and it's
Hmm.
about a 50-50. So we felt pretty good about that, about 170,000 square feet. And I'll just give you the quick specifics. We bought it at 47% occupied. It
Hmm.
was bank owned, and less than a year, we're just about to hit the 70% occupancy mark.
Did you have
So
to peel the office back, or you kept office and flex?
we pretty much kept it what it was. We just really did a lot of capital improvements to the exterior. We're offering TI packages, and we are getting really aggressive on cutting up spaces as needed. So if they need smaller or
Hmm.
whatnot, we can do that. And so we've been able to, yeah, do a couple different build out styles that have worked for that specific neighborhood. And yeah, so it's going really well. We're actually going to market on that deal here relatively soon. And yeah, we would definitely still do office, but we are extremely picky. I mean, you just have to be. Otherwise, you're
Yeah.
going to be sitting on it forever, and you might be having to float it too. And none of us like doing that. So
Exactly. Yeah. Yeah.
yeah.
So I'm watching definitely in the market. I can kind of chime in here. We had really good experience in a couple of buildings. For example, in Beaver Creek that we bought, which was R&D facility in Beaver Creek, Ohio. We thought initially we are going to peel off more to the small Bay of Flex side, but we had really good actually leasing activity on offices. And I'm talking offices that are smaller, up to 1,000 square feet. Everything above 1,000, 2,000 square feet, that definitely gets a little more difficult to lease out. And it's not only the timing that it gets tougher to lease out, but also TI packages and commissions is just much higher, right? Let's say, those small offices, 1,000, 2,000 square feet, 500 square feet, we can pretty much do to the property manager and they leasing fairly quickly. But everything what is above, for example, in Chicago, the commissions are $2 I believe $2 a foot right now to lease out. So let's say it's a 5-year deal is $10 in commissions. 10-year deal is $20 in commissions. If you lease it, and TI is 30, $50. So that's where the challenge where you say if you don't and you don't have a way to finance it, then it just becomes a little bit more challenging. But coming back, those small offices, and if it's actually one floor, and if it has multiple entrances, and not a lot of hallways, I'm fairly aggressive on that one.
Yeah.
So I think that's where I see on multi-story. I'm still kind of, yeah, I don't know. Yeah, still looking at it, good price per pound, but how many years will need to hold it? I don't know yet. Right?
Yeah. Yeah. Well, when you figure it out, let me know.
Yeah, exactly. Nice. All right. Another thing is, I've been watching you for over years, and you definitely are inspiration. How you're transitioning, and really you are call it lifestyle commercial real estate investor, where you put a lot of focus on not necessarily how many square feet you'll acquire, but how much time and effort and life will take out of that. So I know you transition from building a massive team, I think being in 10 plus or even more states, and right now we have a little different approach. Do you mind sharing that? And I know you're super happy about this decision. But do you mind sharing with me and the audience, how is that going for you, and why did you make that choice?
That's a great question. And I think everybody should you know, really focus on this piece because when I first got started, it was all about, building a business, building financial freedom, really creating a team that could execute at a high level and really just building up the portfolio to a size that, I felt like, hey, this is going to meet certain, you know, goals of mine that I've had, right? It's certain
Hmm.
inspirations that I've had over time. And so just recently, just to kind of give you a couple stats there. So I've done about $260 million in transactional volume. At any given time, I'm, around 100 million in assets under management.
Hmm.
And like a couple years ago, I'd hit a lot of milestones and said, okay, well, what's next? And it was, well, why don't we, go bigger, right? Why don't
Hmm.
we start a development arm? Why don't we start a, residential building company? All these different ideas that were kind of popping up and there was opportunities to get involved. And so we opened a second office and started hiring more folks. And I just realized how I was really getting away from what my ultimate goal was from the beginning, which was financial and time freedom. And, back then I didn't have a family, I didn't have kids. Now I've got 2 boys, 5 and 7, and, a couple years ago, I was like, "Man, if I do the ball and chain thing here, I'm gonna miss out on a lotta amazing years, with my family, with my friends, with just," really kind of the direction I was going was like 60, 70-hour work weeks was imminent, right? Based
Yeah.
on our new ambitions were to kinda grow the company, and, I realized, "Wait, that is not what I want,"
Wow.
That's actually, it sounds great, kinda like the shiny object syndrome. I definitely have that, I get excited easily about getting into new projects and, continuing to build, but at the same time, I have to hold myself back because, when I really sit down and think about it, it's not truly what I wanted. And so, yeah, I went through this transitional period where I moved to a bigger city, opened a second office, started hiring, and then realized, yeah, I need to make a big life decision here and go back and regain my clarity. So that's what I did. And, it probably spooked my partners a little bit there. But at the end of the day, it was the best decision I ever made. I work fully remote now. I live between Colorado and Utah. I travel internationally for a couple months out of the year with the family. We have just an epic lifestyle, man. And I don't want to compromise that with, just being able to say, hey, I grew my business, X amount or this or whatever, when I've already hit, so many of the goals I set out
Yeah.
to hit in the beginning. And so I think it's really important for people to, when they get to certain milestones, to really, number one, appreciate, spend time in that moment, and not just brush it off and be like, okay, what's next, right? So really thinking about what is important to you and going back to, when you originally first started, what was really important and what was your goals, and how is that, aligned with your new reality, right? So, yeah, I just think that from that perspective, a lot of people can gain clarity if they do that versus just looking for the next milestone, man. And yeah, it's
Yeah.
been a good ride.
That's so true, man. Yeah, but you hear it a lot of times, but you actually have to do it yourself in order to make those decisions and to see it, right? Those ambitions cost a lot, but and it's different for everyone. But watching you, it definitely seems like we have an amazing life, and definitely you made great decisions. That's amazing. Cool. Another thing which I want to touch on, I think we had a couple of discussions with that. Where do you fall between keeping the assets only for like long haul and achieve that financial freedom or whatever you're trying to achieve just through just sheer grind and hold them because we kind of know exponentially that cash flow goes later on, or taking chips on the table and selling those assets constantly when you do the first boost of the value add. I was in both spectrums, let's say, I used to flip houses and I used to flip all commercial real estate in the beginning, just they get the first boost, and then I transition just holding them as much as possible. Personally, both I have good, very positive effects and very negative effects. The first one, you have a lot of cash and you pay a lot of taxes, but you don't build balance sheets. On the other side, you build balance sheets very rapidly, but you're starving on cash, right? So I'm right now trying to do both, and I think probably is going to change it later in life. Where do you fall? What's your philosophy?
Yeah, so I look at it as having 2 buckets. So,
Mm-hmm.
bucket number 1 is you gotta keep the lights on, right? And
Mm-hmm.
that requires cash. You gotta have cash to really operate the business, to, have employees, to your lifestyle expenses, etcetera, right?
Yeah.
So I always have deals that are currently being, fixed up, filled up, and flipped, right? And then I have other deals where I'm looking to build that balance sheet like you mentioned, but more importantly, cash flow. Like
Mm-hmm.
that to me is, I didn't even know what that really was in the first, half of my career because I didn't have the luxury of being able to hold on long term. I was, starving for cash, and I
Mm-hmm.
needed to constantly be fixing up, flipping, getting that cash, putting it into the next 2 or 3 deals.
Yeah.
Right? So it was this balancing act of building, 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 but it was through the flipping that I was able to do that. Now there's a transition where it's like, I really want that steady eddy cash flow that I can really live off of, and not feel like I have to sell the portfolio to get a big lump sum of cash so I can go do my next set of opportunities and deals, right?
Mm-hmm.
So right now I would say that cash flow is actually a little more important to me,
Mm-hmm.
but on the flip side, the way I've kind of structured my company in a big way is we're doing a lot of joint ventures now. So I'm helping some guys build up, some sizable portfolios, and at the same time just guys doing their first deal.
Mm-hmm.
And, I always give these guys, because I know what it was like to be in that position. They're the boots on the ground. I'm helping through, advisory, capital, signing on debt, so helping with the debt and equity stack, management, asset management, and strategic
Mm-hmm.
business on these deals, right? So I always give them the opportunity to say, "Hey, what do you wanna do? Do you wanna hold it, which I would rather do, or would you rather flip out of it?" And they all wanna flip out. They all
Yeah.
wanna make, right? So, as much as, yeah, a lot of these deals I've wanted to hold lately, we've actually been flipping a lot lately because, just, they're in a different position than, where I am. So, I'm still holding some deals. We're definitely doing that. A lot of times that's just like, some deals I'm doing internally with just my one partner of the company, and then when we're doing a lot of the JV deals, we tend to flip out of those. So, yeah, I think though that cash flow brings a lot of stability in your mindset, even though that's
Yes.
not entirely true because, you can work on a deal for a year or two, make 1 million or 2, and then, yeah, you don't have any cash flow coming in versus you could have maybe 100 grand or 200 grand coming in a year from that deal. But I just sleep better knowing that, hey, if the music stopped and I couldn't go out and buy any more deals, like I have these deals that are really stable, have non-recourse debt, and they send out a really nice paycheck every month so I can still live my current lifestyle. So that brings a lot of stability and peace of mind.
Sorry, so that's a great gut check. So let's say, for example, what gives you more peace of mind, whether million, $8,000? I think that's where it comes down to probably a lot of times decision, right?
Totally. And you know how it is, Saul, like these deals that we buy that are value add, they don't truly start cash flowing till, 6, 12 months after they're stabilized because you're having to go in there, do a bunch of capital improvements, release, build out spaces. That can take months, if not years.
Yes.
And then once they're in, there's typically a
Abatements and
yeah, commencement period where they got free rent for 6 months, and you're doing that over 20 different tenants. Well, it takes time for that whole thing to stabilize, right? So that could be a couple years, and, we've created the value in a short amount of time, so we see that we can go get this big check now
yeah.
versus holding out and waiting, and then it's like, "Okay, year 3, 4, or 5, now we're sending out the big checks," right? So, you know how it is. But, yeah, at the end of the day, I think it's very important to have both, and that's why I look at it with 2 different buckets. So, one thing I look at is I say, how's the area and how are the tenants in this building? And if it's a really high quality asset with great tenants in an area that's growing, I really try to push to hold that. But if it's like, a mediocre area, demos are okay, it's a good value add deal. You have mom and pop tenants, but you don't know the likelihood of if they're going to be around in 5 years. That might be a good one to flip.
That's a great point. Yeah, I think that's a great filter, and I try to do the same way. When you do value add, and you think like, will I have to do another value add where those lease expire and have to retenant, or the area and demand will command that it's not going to be such a heavy lift. It just will be because of the area, it'll continue to increase in value and then it's going to keep going just naturally, not because you made the property so beautiful and so attractive, right? That's great advice, and thanks for sharing that. Do you have anything that you are raising right now, or do you have any asks, or are you chasing deals? Are you chasing capital? There's quite a lot of people listening to this, so that would be the time right now to share. If you need any help, maybe not, but that's a good segue.
I mean, look, a lot of what we're doing right now is we're doing a lot of partnerships, a lot of joint ventures, or if people are wholesaling deals, like, yeah, I mean, we're always interested if someone's looking to partner up with us, a seasoned operator. We have a lot of the components in-house from management, asset management. We've got a lot of great lending relationships, both on the debt and equity side. And then we run a kind of internal fund, prime reserve fund, that my partner and I are basically putting a bunch of our own capital into. And then we have our investors who, want to come in. It's somewhere around like 8%, 9%, and it's liquid. So, if they put their money in and need it back out in 3 months, it's available. But it helps us on our internal deals to come in quick with cash, close with cash, and then we'll worry about the focus on the debt and equity thereafter. If it's you know how it is with a great
Yeah,
deal, you got to move quick.
exactly.
So, we're building up that fund. So if anyone's interested, happy to talk to them about it. And if anyone's got a deal and they want to partner up, I'd love to chat.
All right. Awesome. Awesome. Where can they find you? Where can they find you?
So vailcommercialgroup.com is our website. But if you want to reach out to me directly, Danny at vailcommercialgroup.com. That's VAIL commercialgroup.com.
Okay. Awesome. Awesome. All right. I like to finish with a question that previous guest asked, and then you're gonna have another question for the next guest. So the question from the previous guest was Shai Yakubovich, and he asked the question, "What are you most grateful for nowadays?"
I am most grateful for my health, my family, and my freedom. That's it. Yeah. Those are my three things I every day. If you don't have your health, you can't do everything else. So if health is number one, family, and then freedom, man. That's it.
Amazing, awesome. Do you have a question for next guest? I would ask.
Yeah. Question for the next guest. Okay. I'm really interested in longevity, and I have been implementing a lot of hacks and really focused on just a lot of different components of that. So I'd love to ask if they have any golden nuggets regarding longevity that they could share with your crowd.
All right. Any golden nuggets related to longevity for sure? I'll ask next guest about it. Awesome.
Sounds awesome.
All right, Danny. Thank you very much. It was a pleasure chatting with you. Hopeful to catch up sometime again, maybe in 6 months. I know you'll be traveling a lot, but thank you for all the nuggets. That was amazing. And thank you very much.
Thank you, Saul. Really appreciate it, man. Always love hanging, and it's been great to chat.
All right, man. Thank you.
You've been listening to the Value Builder podcast. For more strategies, stories, and episodes, head to valuebuilder.co or subscribe on your favorite app. Always make it better than you found it and keep adding value. See you in the next one.